What's up, everyone? It's Cowdy with Money Investing. In this video, we are going to be talking about NVIDIA, ticker symbol NVDA. So this is going to be your pre-earnings video on this company. We'll go over exactly what NVIDIA is expected to report next week for the fourth quarter fiscal year 2022. And they are going to be reporting earnings on February 22nd. That's going to be a Wednesday after the markets close. So we're going to go over the EPS estimates, the revenue expectations, and I'll break down all the things that you need to know about NVIDIA in terms of valuations, revenue trends, earnings, talking about the balance sheet. We'll go over their third quarter numbers, and then we'll also calculate their intrinsic value and, of course, go over the technical analysis as well. As always, if you guys enjoyed this video and find it helpful, don't forget to subscribe to the channel and hit that notification bell if you don't want to miss out on any future market updates, videos, and live streams. And the link to our Discord and Patreon is going to be down below if you're interested in joining us. That's the second link down in the description if you want to be a part of our money investing community. We've got a little bit over 3,600 members in our Discord talking about fundamental analysis, technical analysis, and macroeconomics pretty much all day. And you'll get access to all the private videos and alerts as well. So this right here is going to be the upcoming quarter's earnings for NVIDIA, and the revenue expectations are going to be just a little bit over $6 billion. That is exactly what NVIDIA is also guided for, and we will go over the guidance here shortly. And the EPS is going to be expected at around 80 cents per share. So on TradingView, you'll notice that NVIDIA's EPS expectations for next week is going to be a little bit over 81 cents per share, and the revenue is going to be just over $6 billion. So very much in line with what we have over on Seeking Alpha based on the consensus estimates as well. This right here were the numbers for the third quarter fiscal year 2023, by the way, they're in. And you'll notice that this is on a non-GAAP and on a GAAP adjusted basis. So for Q3 fiscal year 2023, revenues came in just shy of $6 billion. And that was unfortunately down on a year-over-year basis, down 17%. Gross margins were also down quite a bit. I still remember NVIDIA had a couple quarters of really bad performance in 2023 because of crypto revenue being down. Gaming was down substantially. And of course, personal computer demand was down also quite a bit. And that hurt a lot of semiconductors, including NVIDIA, which pretty much dropped in gross margins and revenue numbers as well. So down 11% in the third quarter gross margins. Operating expenses were up 31% year over year, and operating income did go down quite significantly, about 77%, but they also had a little bit of a acquisition cost, and the net income was down over 72% in the third quarter, but on a non-GAAP basis, it was down 55 to 51%. Doesn't make things look any better, but it was obviously down a lot less than on a GAAP adjusted basis, and diluted earnings per share on a non-GAAP basis were 58 cents per share for the business. This right here is going to be for the 9 months ending in October. So they are going to be reporting for the months of November, December, and January. So NVIDIA is in a different fiscal year as opposed to a calendar year, but they are still going to be reporting for Q4 fiscal year 2023, not 2022. So if you take a look at the revenue, just a little bit under $21 billion, that is actually a very, very small amount of growth. And cost of revenue did go up quite a bit from 6.8 billion to 9.4 billion. So, simple math, revenue was up, but not as much as cost of revenue, because cost of revenue went up a lot more than revenue. And as a result, their gross profit did decline on a year-over-year basis. And then they had a pretty significant spend on R&D, $5.3 billion in the first 9 months versus $3.8 billion. Sales, general, marketing expenses, administrative cost, $1.8 billion from $1.6 billion. And this right here was the acquisition termination cost for NVIDIA, which their acquisition pretty much fell through, and they had to, pretty much pay up a $1.3 billion expense. This was a one-time fee, so obviously it's not going to recur every single month, every single quarter, every single year. So if you exclude for that, their numbers might look a little bit better, but not so much. So $8.5 billion were their total operating expenses versus $5.4 billion same time last year, and as a result, a significant drop in the income from operations. In other words, operating income down from $7 billion to just under $3 billion, and their bottom line net income was a little bit under $3 billion versus $6.7 billion same time last year, and their diluted earnings per share about $1.17 so far for the first 9 months. But this again is on a GAAP adjusted basis. Non-GAAP is going to be closer to $2 per share in the first 9 months. And again, if you pile on another $2.80, in other words, 80 cents per share, we're going to be sitting at just a little bit under $3 per share in earnings per share for NVIDIA. Now, when it comes to the balance sheet, and that's for the full fiscal year 23. Now, when it comes to the balance sheet, they're sitting on just over $13 billion of cash, and you can see how that has significantly gone down. Cash and cash equivalents and marketable securities down from $21.2 billion down to $13.1 billion. And then goodwill is $4.3 billion, total assets are $40 billion, and current assets are going to be $23 billion. And if you take a look at their long-term debt, $9.7 billion. So it is still, not really a big problem. Short-term debt is $1.2 billion. Combine those two numbers, and we're sitting at just about $11 billion. Earlier, NVIDIA had a lot more cash versus total debt on the balance sheet. They still have more cash than debt on the balance sheet, but not at the same margin, because earlier it was at $21.2 billion of cash and marketable securities and, about the same amount of debt, $11 billion of debt. But now it seems like they've got a lot less cash and about an equivalent amount of debt, which obviously makes their net debt still negative, but not by the same amount. In other words, in 2021, the balance sheet was a lot better. In 2022, the balance sheet has gotten only worse. It's not terrible, but it's only gotten worse, if you understand what I'm saying. And total assets do exceed their total liabilities, and current assets also exceed their current liabilities. So current ratio is good. Debt to free cash flow is still under 3. Net debt is still negative, and total assets also exceed their total liabilities. So balance sheets are good still for NVIDIA, but something definitely to pay attention to as the time goes on. Now, data center. This is the bright spot for NVIDIA. So this has been a very solid performer for the company, 31% growth year over year, 1% quarter over quarter. This has really been the sector with, which has kind of held up NVIDIA in its growth rate. If it weren't for data center, NVIDIA would have been in a much worse situation, trust me. But because of data center sales, they've been able to kind of, weather through some of the declines in gaming. Now, gaming was a big decline here, which is also a pretty substantial part of their revenue. And you can see how in the second quarter, this right here was the big drop. Third quarter was a big drop. So pretty substantial drop in gaming sector, 51% year over year, 23% sequentially. And decline reflects a lower sell in to partners to help align channel inventory levels with current demand expectations. And we believe channel inventories are on track to approach normal levels as we exit Q4. And if you guys remember correctly, a lot of NVIDIA's graphic cards and semiconductors, like the chips that they produce for gaming specifically, were being used for crypto mining. But as there was a significant pullback in crypto mining, obviously the demand for gaming also went down. That's how they reflect that in their earnings calls. But obviously, taking a huge hit in this particular sector, which is affecting their margins, it's affecting their revenues and earnings as well. Automotive, it's a very small part of their business. So even though it's growing 86% year over year, 14% quarter over quarter, it's not really enough to make a huge dent on revenues or earnings because it's only $251 million. So it's less than $500 million. And this right here is even a smaller business for the company, professional visualization. And to make things worse, it was also down 65 to 60% year over year and quarter over quarter, just about $200 million. Now, this right here was their guidance for the fourth quarter 2023. Revenue expected at $6 billion plus minus 2%. And this right here was the big prediction there. Gross margins, right? They're really confident that they can once again hit 63% on a GAAP basis and 66% on a non-GAAP basis for the fourth quarter of fiscal year 23. If they don't hit those numbers, I would not be surprised if NVIDIA takes a huge hit and the stock price starts to come down. Operating expenses are approximately $2.56 billion. And on a non-GAAP basis, 1.78, and capex between $500 million to as much as $550 million for the company. We don't have an EPS estimate, but of course, according to analysts, it's going to be around 80 cents per share. This is the market opportunity that they have laid out for their own business, $1 trillion opportunity between gaming, chips and systems, automotive, and enterprise software, Omniverse, enterprise software, financial services, healthcare, logistics, manufacturing, retail, transportation, you name it. But that's the entire opportunity that NVIDIA is dealing with at the moment. So when we go over to the financials, I don't have to spend over too much time because we've already talked about these quite a few times. But revenue, very consistent growth. You can take a look at these bar graphs over here. Just consistently growing. This right here is going to be revenue per share. So again, you can see how consistently they've been growing. Net income is going to be over here. Very, very nice consistent growth here. Over the last 3 years, you can see how they've really just gone parabolic to almost $10 billion. But once again, in fiscal year 2023, things are not looking super great. And diluted shares outstanding, they've been rather stable. 2.5 billion to 2.53 billion. So more or less about the same. And then when you take a look at the valuation here, unfortunately, that's the one piece for NVIDIA, which is a little too high. I mean, price to sales, we're trading at 19 times. Forward price to sales multiple, like give me a break. 18.7 times on a trailing basis, and then on a price to earnings basis, forward 65, 56 on a trailing basis. I mean, that is it's a premium stock. It is for, people who really want to pay that much premium. And even if you compare it to NVIDIA's 5-year average, it's a little bit closer to 41, 42. The highest it goes up to is 59. But even right now, like on a gap basis, trailing 12 months, 90. And a forward, we're trading at 128. Price to sales, average has been around 14 to 16, and it's now trading at 19 to 24 on a price to book basis. So without a doubt, valuation's way too high for this company. It's trading at a premium. Profitability metrics are good, so no doubt it is a fantastic business. It is a company that is very efficient in the way they do their business, and of course, very good margins, very good revenue, very good earnings growth. Things are good, but it's just a little too pricey, in my opinion. Now, this right here is going to be the earnings estimates. They are expected to drop about 26.4% in this year, in fiscal year 23. And even if you go out 3 years, 4 years out, they're still not coming down under 20 times earnings, right? They don't come down to 20 PE until 2029 earnings, right? That's going to be a little bit over $10.61. So if you price in this growth from 327 to 1573 all the way to January of 2032, we come up to a compounded annual growth rate of 19% over that time period, right? So from 2023 to 2032, that's going to be about 9 years out. It's going to be 19%. And 2027, I believe, is going to be $7. Yep, so $7 per share is going to be January of 2027. So if you plug that in, that's going to be just a little bit under 21% growth for NVIDIA. Now, I'm being very generous here, and I'm going to show you exactly what I mean, because I'm going with a non-GAAP earnings of over $8 billion, accounting for that one-time fee that I showed you guys. That's the acquisition termination cost, excluding for that, and assuming that net income was going to be $8 billion in 2022, despite what the company reports in the fourth quarter. And let's just do with a very optimistic assumptions. Let's just be very generous with NVIDIA here. I'm feeling generous today. I'm going to go with 25% growth rate, 12% discount rate, 10% margin of safety, little to no dilution because the company has really not bought back any shares, but they've also not issued any shares. So we're going to go with about 0% share dilution. Now, when it comes to the P multiple, right now trading at 45 to 50, I'm going to put it around 25, right? 25 to keep that PEG ratio intact at 1. Right? So we're going to go with 25 times P multiple. And then the fair value ends up at $123 per share. NVIDIA is at 213, right? So this is, let me just explain to you guys exactly what I'm doing here. I'm going with a really, really optimistic assumption. Like for those of you know me who've been watching the channel for a long time, I don't go with 25, like growth rates in the P multiples. And that's even higher than what the analysts are projecting NVIDIA's earnings growth to be over the next 5 to 9 years. I'm going with 25% for NVIDIA as a growth rate over the next 5 years. So giving them the leverage, giving them the benefit of the doubt that they're going to be able to, turn things around and grow earnings by 25% compounded annually over the next 5 years, and giving them a decent multiple of 25 to keep that PEG ratio at 1. Very reasonable discount rate, very reasonable margin of safety, little to no dilution, no buybacks, no dilution. And even then, we end up at a fair value of 123, right? Now, imagine if I were to go with my personal conservative estimates, 20 and 20, we'd be looking at an $80 fair value, right? Even if I go 22, just a little bit under $100 in intrinsic value. Now, I know this video is not going to get the most, decent comments because people, obviously NVIDIA is a fantastic company, not denying that, right? Not denying the fact that NVIDIA is a very good business and they've accomplished a lot and there's a lot of opportunity for this business to continue to grow. But it's a real question of how much do you want to pay for this stock, right? Are you willing to pay 60 times earnings and 20 times sales? If that's you, then that's fine, right? That's totally cool. But if you are more, into valuations and you understand, how much it should really be worth, then you want to definitely pay attention to and be more conscious about the valuation for the company, and what it should really be worth in terms of that intrinsic value. So this is going to be that sensitivity grid. So you can take a look. I'm using 25-25, meaning 25% growth and 25 times P multiple. Even for me, that's a little too high, but we're gonna roll with it, and that's gonna be ending up at an intrinsic value of about $123.50. And I'm taking into account a net income of about $8 billion, which is still, pretty substantial, right? They're not gonna do $8 billion. They're gonna do actually a lot less in 2023, even both on a non-GAAP and a GAAP adjusted basis. So without a doubt, I think NVIDIA, in my opinion, is a really pricey stock. It's trading at a premium, and then not to mention the technicals just don't really make any sense to me. Like, RSI, MACD, extremely overbought. So next support really is going to be down to 190. It was a fair stock back in October when it was trading in the low 100s. It was definitely a very fair stock. But since then, I mean, it's rallied way too much, way too fast, 110% in just a matter of a few months. This goes to show how much euphoria it has driven this company, back up to almost its all-time highs. I mean, it's only off by like about 49-50%, which actually is a lot, but it's almost rallied so much. And we've seen that retail obviously is behind it, because NVIDIA was one of the most bought stocks or the companies that money was poured into in January and February of 2023. So just be careful. And again, earnings next week, we'll find out what the company's guidance is going to look like, what they actually end up reporting. But support level right now is going to be sitting roughly at around $190, and resistance is going to stay put at 230. So hope you guys enjoyed this video. Let me know your thoughts on NVIDIA, and definitely leave your comments down below what your thoughts are on this company. As always, if you enjoyed this video, found it helpful, make sure that you drop a like, subscribe if you're new, and check out the Discord and the Patreon link down in the description below to join our Discord and our Patreon and our money investing community. As always, happy investing. I'll see you all in the next video.